This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news about money. And today we have great news about real estate. All you guys out there who think you're the next Donald Trump or some tycoon, this is your show. Real estate's in a bubble. Stock market's in a bubble. Bond market's in a bubble. So I just caution you on that because, as some of you have heard me before, the best time to buy is after the crash, right? I mean, that's
right.
So just be careful right now. So take what we say right now. Just realize we're at the top of a bubble right now. We are at war with Russia, and we got a moron running our country. It doesn't mean you still can't get rich, though. So I'm here with a show with one of my best friends, Ken McElroy. Been 25 years, been fast. Yeah. We have made frickin' millions together. We pay very little in tax. And so I'll tell you how we met is when I came out with Rich Dad, Poor Dad, we created the cash flow board game. And some people, well, how do you sell this board game? Well, I think I'll write a book. So I wrote a book called Rich Dad, Poor Dad. And naturally, the publishers in New York said, you don't know what you're talking about. What do you mean your house is not an asset? What do you mean savers are losers? What do you mean the rich don't work for money? And it just violated everything that these academic types are taught. And the reason is because they went to school. They're A students. And capitalists don't really need that stuff. So anyway, I'm catching hell all this, and then I meet Ken McElroy, and he goes, hey, I like what you're saying.
Yep.
Right? So what happened? How'd that happen?
Well, I got to tell you, like millions of other people, Robert, I loved your book. It was exactly the message that I hadn't read anywhere, and it was true. And so I was lucky that I got to meet you after reading it, and it was what I was doing, but there was no book about what I was doing. I just knew that cash flowing real estate, using bank debt and all those kinds of things worked.
Yeah, because everybody was saying get out of debt, live debt free and all that. And for most people, that's really good advice. If you have no financial education, live debt free and all this. But the biggest mistake that people make is they call their house an asset. And if you understood a financial statement, which is Rich Dad, Poor Dad, assets put money in your pocket, whether you work or not, and liabilities take money from your pocket. So the average person, even if they have a PhD from Harvard, they're buying liabilities they call assets, like a 401k. Is it an asset or liability?
No, it's a liability.
Because the money's going out of your pocket.
That's right.
I just don't touch that stuff. So it's because Wall Street and the Federal Reserve Bank and all those guys are telling you what to do that you think your liabilities are assets. Oh, my father, poor dad, he always said, yes, son, that house is in our name and it's my asset. And my rich dad would say, your father may be a PhD, but he's an idiot, And so when Kenny comes walking up to you one day and says, I like your book, I'm going, thank God. But there was another reason Kenny liked the book is because the key to real estate is management, property management. And what were you doing at the time?
Well, that's part of why I loved your book is I was managing property for other people. So I was an on-site manager. I was collecting rents and paying the bills. And then if there wasn't enough money, the owners would get mad. If there was more, I would pay it to them and they would be happy. And it was really that simple. That's how property management is. If you return cash flow to them, they leave you alone. If you don't, they don't leave you alone. So in the property management world, I was living the principles in the Rich Dad, Poor Dad book. I literally was managing for people that were using debt. They were using other people's money for the equity. They were buying real estate. They were because I would meet all the partners. They would come through the buildings and I would meet them all. And they were just normal doctors and CPAs and lawyers. And I was like, this is wild how all this works. And then you start to put the pieces together because I was in the business long enough. And the principles in Rich Dad, Poor Dad were true, and that's why I enjoyed the book so much.
But the hardest part of real estate is finding a property manager. Because if you can't find a property manager, you're it, right?
Yeah, and I didn't know that until later. I started managing properties in college, for free rent, basically. And then you learn pretty fast, like who pays rent, who doesn't pay rent, and the problems that can come from renting something too quickly and not doing credit checks and all those little things that all add up to no cash flow.
And so that's what gets most new real estate investors in trouble, is they don't know how to manage the property. And there's a lot of legal stuff to it.
Well, yeah. So here's what I see. One of the biggest mistakes is people could look at it like a stock or a stock market, or just, they invest their money and then they walk away. Like all of a sudden, magically, these great tenants are going to show up and you're going to be, getting 3 bids for the landscaping and the painting and the cleaning and all the things and the utilities and looking at all the bills and all that stuff. They just think that just happens. That's what property management is.
Or they say, Kim's father would say, he was a stock guy, and stock guys are different than real estate guys. They're very, very different. Yeah. Very, very different. He says, I don't want to fix toilets. And I said, what makes you think I fix toilets?
Yeah.
But they can't get past that. So it's property management that's the key. So Kenny and I started, but Kim was managing our properties, and boy, it is really a bear.
It's hard.
And then, so Kim was begging Kenny, please manage our properties, please manage our properties. And Kenny said the magic words, I can't help you. What did you say to Kim?
Yeah, you guys are thinking too small.
And it was like a bullet going through her brain. She says, what do you mean I'm thinking too small? What did you mean by that?
Well, you were buying small units, like 10 and 12 unit buildings.
Something we could manage.
Yeah, and you were doing it for that reason, and because you could drive over there and put a tenant in there, or look at a unit, but the truth is, if you have a manager managing a 10-unit building,
it's too expensive.
Yeah, you also have a manager managing a 200-unit building. So the difference between a manager that's going to accept a 10-unit building and a 200-unit building is experience and wisdom, and somebody that really understands the business. And so when you start buying bigger properties, what happens is you attract better people and they make more money and you pay them more money. And all of a sudden, life becomes a lot easier the bigger the properties are. And that's what I meant when I said it.
And so Ken prevails. Kim, he said, okay, I'll take over. And he walked onto some of our properties. The biggest thieves were property managers.
And I wish I hadn't seen that before, but I have. I mean, we, at this point I had managed, 20, 30,000 units, up and down the West Coast. So I knew I'd seen a lot of things and this. So when you, as somebody who's done that for a while, when you step onto a property, you can see the signs.
Yeah.
Like I remember one unit, I opened the door and it's filled from floor to ceiling with appliances and electronics and leaf blowers and lawn equipment. And
this is our property, right?
Yeah. Oh yeah. This is one of your vacants. And it's full of stuff from like Ace Hardware and Home Depot and Lowe's and I'm like, okay, this guy's stealing. That was
Our
it.
property manager's son was stealing from us using our credit card to put stuff in storage from Ace Hardware, and he was fencing it.
Yeah. So those are things that I've seen before. Oddly enough, I've seen your manager steal money. I've seen all kinds of things. As you are, just like anything, no matter what profession you're in, if you're in it a while, you start to see things from clients and customers and vendors, and so. So it was super easy for me to, within 10 minutes, I was like, okay, you've got a problem here. We're going to have to extract your management team here, put new people in. And that's when Kim she's like, no! Remember? Because the gal you had managing the property was very nice, but she had to know because there was a vacant unit full of stuff and she was just covering for her son. So she was very, very, very nice. Trying not to get her son in trouble, but he ended up getting in trouble.
Yep. And then we've had our property manager one night, one of the tenants called us and says, hey, your property manager's a truck in front of his house and he's moving your refrigerator out.
Yeah.
Our property manager, we gave him a big house on our property, and one of the tenants called. He says, the guy is moving furniture out of your house, the refrigerator, at night.
Yeah. Yeah, I've seen that. I've seen tenants do it. There's all kinds of things that happen in the property management world that don't get discussed a lot. But, the signs are there and they're pretty consistent. And so honestly, you guys made a really good decision on the property itself and the location. But so it was literally a month before we had that thing turned around and re-rented in full. It was not that far off.
So Kenny took pity on Kim and myself. And we still have those properties, and he sent his best team in there to clean the whole rat's nest. We had several small, like 18 units and 25 units. And he cleaned out the rat's nest.
Yeah.
And the rat's nest with a property manager.
And some of the people they had in there too. So, that's the other piece. I've had everything, man. I've had drug dealers, we've had prostitution, we have a lot of crime at properties before that we've taken over, and so I've seen a lot, and once you miraculously, once you put somebody in there that's pays rent and works, like, your life gets a lot easier. So it's really not that difficult, but it's common sense.
So one more warning, we're at the top of a market right now, and Kenny and Kim and I were buying at the bottom of a market. And that's why it kind of made sense. Be careful. And you just don't go and buy, like, I won't mention his name, but he's very famous in the real estate world. He says, go out there, start with a 200-unit apartment house. And I went, are you kidding me? I think it's what, $15, $20 million 200-unit apartment house. That's how you start. And Sarah knows I got into it with him right on this Rich Dad radio show. I mean, would you start with 200 units at $20 million?
No. You got to start with small deals, make small mistakes, just like you would do anything.
So I remember that show.
Oh, I remember that show.
We don't talk to him anymore.
No. I mean, I don't think he'd answer my call even if I tried.
So we at the Rich Dad Radio program here will do our best to make sure that we are upfront with what we say. So again, it's at top of a market, top of the bond market, top of the stock market. Baby boomers are retiring, so be very, very careful. And you just don't go out, so I'll become Donald Trump and I'll buy a hotel. You just don't do that stuff. So when we come back, we're talking more about Kenny and his latest book. It's called The ABCs of Raising Capital. Because one of the beauties of real estate is that, as it says right here, only lazy people use their own money. So if you're listening to this program and say, well, I could get into real estate, but I don't have any money, and you effing rich guys have money and all this stuff, we didn't have money either. So this only lazy people use their own money comes one of our teachers, Frank Crary. He was teacher for Kim, Kenny, and myself, and he would laugh at us. He was in his 90s, and he'd say, only lazy people use their own money.
Yep.
And so the book that Kenny's coming out with now is his fourth in the series, The ABCs of Raising Capital. We'll be right back.
Have you heard about the expanding influence of BRICS, Brazil, Russia, India, China, and South Africa, and its potential to severely impact the US dollar by possibly creating a new world currency? Even JP Morgan said, and I'm paraphrasing, the impact of BRICS would most likely be felt here in the US, where moving away from the dollar would cause our financial assets, like our IRAs and 401ks, to lose value. We agree with JP Morgan and many others. Now's the time to position yourself for stability, security, and wealth protection. So take it from Robert and me, whether you're a seasoned investor or just starting, we believe that gold should be a part of everyone's portfolio. Seize the opportunity to ensure your financial future with gold, and do it with one of the best in the industry, Allegiance Gold. Allegiance Gold has done things right from the beginning, having earned 5 stars with TrustLink and an A+ with the Better Business Bureau. Allegiance Gold can help protect your IRA or 401k with physical gold and silver, or you can have it delivered securely to your doorstep. Get up to $5,000 in free silver on a qualifying investment when you visit protectwithrobert.com today. Or you can call 844-3-ROBERT. That's 844-3-ROBERT. Robert sounded the alarm in 2023, and his warnings came true. Unfortunately for many, it was a year of lost wealth, but it was the complete opposite for the billionaire class. Now the wealthiest 10% of Americans own over 92% of all U.S. stocks. But here's the good news. You can invest just as these billionaires did. Robert has said if you want to be rich, do what the rich do. So you can diversify across the asset classes with what are called low correlation alternative assets. For example, fine art as a tangible asset that rarely ever changes hands, the fine art market is more resistant to traditional volatility. So the fine art component of these billionaires' portfolios are at less risk. And now you can add the same blue chip art to your portfolio from the comfort of your own home. You don't have to be an art expert to do so. Masterworks, our longtime sponsor, has an art investing platform with over 880,000 people on board and nearly $1 billion in assets under management. From their successful art sales, they have consistently delivered a profit to their investors, and you can even go check their numbers. Our viewers can skip Masterworks waitlist by using the link in the description below. Hi everyone, I'm Kim Kiyosaki. Thank you for being with us today. As CEO and co-founder of the Rich Dad Company, I can assure you Robert and I are both dedicated to our Rich Dad mission to elevate the financial well-being of humanity. And you are the humanity. We truly want you to succeed. When you succeed, we all succeed, and our mission grows stronger. With that in mind, I'm excited to extend a personal invitation to you to elevate your financial well-being by attending our exclusive free online wealth building event hosted by Robert. You'll learn what to focus on first to start increasing your cash flow immediately. You can reserve your seat right now by going to richdadonline.com. Just go to richdadonline.com. The event is 100% free and will help you achieve your financial goals.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. The guest today is Ken McElroy, and after Kim and I made millions and millions and millions of dollars in tax-free, and we still own our real estate. We don't sell, we don't flip. We're buy and manage forever type real estate people. Kenny wrote 3 books for us in the Rich Dad series. So what are the first 3 books?
So yeah, the first one was the ABCs of real estate investing, and that was a basic book, and that obviously was a bestseller and did really, really, really well.
So start with that book, okay?
Yeah. Then the next one is a little more advanced. So that's something, putting more complex stuff together, syndications, talking about IRRs or, and those kinds of things,
How you refinance, you pull out money tax-free.
Yes.
You see, guys like Dave Ramsey said, live debt-free, not us. We want debt. And that's one of the beauties of real estate.
Yeah, so it goes into more detail about how to use debt and that
so
kind of
stuff.
stuff.
Book 2.
Yeah, and then the third one, of course, which we talk a lot about, and we talked about in the first segment, was the property management piece, the ABCs of property management. And because I've seen lots and lots and lots of investors, especially in the property management world, they buy something and then they hand it over, or they try to manage it themselves and they run it right into the ground.
But those are the biggest investment opportunities.
Those are the greatest deals to buy.
When you find an amateur like us running them, that's when Kenny steps in.
Yeah.
But anyway, so your latest book, the 4th book, is the ABCs of raising capital. Only lazy people use their own money.
I knew you'd like that one.
But you've got to read the first 3 books first, right? So what does this book cover here?
So essentially at this point, I think that if you're getting angry and hearing, I need to save my own money, that's an excuse. I hear it all the time. I have so much equity, I have this, I don't have enough money to invest. That's literally an excuse. That's like I'm fat and I'm not going to go to the gym. It's in that same category. And the truth is the people who raise capital know that this is the way it's done. And so if you think your financial planner raises your capital, they make fees off of you. The entire industry is set up this way. It's set up to attract capital, to invest into things, and you can do this too. And so this book is a step-by-step book on exactly what to look for and how to do it and the questions to ask.
So what are some of the points you cover in the ABCs of raising capital?
Well, the first thing, of course, that we always talk about is finding a deal. If you can find a deal, and this has nothing to do with raising capital, if you can find a deal and you can get the bank to finance it and you can get investors to invest in it and it produces cash flow, then you can just replicate the rinse and repeat. That's it.
And when I started years ago, this was 74, my real estate agent, my real estate teacher says you have to look at 100 properties.
Yeah.
And I looked at 100 properties because you might find one. And I had to write a report on 100 properties. This was my assignment from that class in 74. And all of a sudden, as I'm writing this report up, the good, the bad, the ugly of each of the deals, I was like, oh my God, there it is. So my first deal was $18,000 on the island of Maui. And everybody said, well, you can't afford Maui. But there was Maui, $18,000, nothing down.
That's right.
And I made $25 a month. It was an infinite return because I made $25 on nothing.
And by the way, what you did do is you used the bank financing. So it was other people's money, and that is the point.
But I had to look for the deal.
Right.
Now the question is, how many deals do you look at before you find one?
A lot. I mean, that's the thing. And what happens is if you're investing, let's say stock, I could buy a stock right now on this show, literally from my app on my phone, and so that is super lazy. I hope it goes up. What's hard is looking for deals and finding equity and debt for those deals. That's what's hard, and being able to see them so that you can educate investors. And so that's what we do now.
Right, and so that's why your first 3 books are essential. The ABCs of finding real estate,
Yeah.
the ABCs of financing real estate, the ABCs of property management, because that allows you to see, and then you can raise the capital. But a lot of people are lazy.
They are lazy, and this is this. I knew you'd love this quote because most people believe that they have to have the capital raise or they need to have come from a rich family, and those are literally excuses.
Right.
And it's just not true. What I found, the biggest issue that we all have right now, and most of the people that we associate with, are deal flow.
And tonight, my 32nd in Camelback, that
Yep.
apartment, it's an old age home going up. You know how I made my money on that one?
How?
Our friend Sal got it rezoned from 3 stories to 4.
Yeah. Change of use. That's called a change of use. That's in the
Holy
book.
mackerel, we made so much money. It's shocking. But then the property in front of it, where Tarbell's and Tomaso's is the night I'm meeting with Mark Tarbell. And we want to take a run at that corner. But that's how you find a deal.
Well, the thing is, guys, is you drive around and you see, let's say, 3 office buildings on a corner and the 4th one has a home, you could pretty much assume that the height, in that area is already zoned for, something bigger. So that home is all of a sudden very expensive, and that's what you're talking about.
Right.
And as you start to see these things, you can raise capital for them.
Right. But it took me with that $18,000 unit. When 1974, looking at 100 deals, analyzing 100 deals, I had to write 100 papers up.
Yep.
And suddenly I could see it.
Yep. It's repetition. It's like anything. You are not going to get the wisdom unless you go out and start looking at deals, start getting emails, start looking at stuff, start getting on the phone, start walking units, start going to neighborhoods, and start calling people. It's just not going to happen.
And the most amazing thing, we have a video that we've done. What would you call it? What we just did, Sarah, with the video, with Kenny and I, just in
like a promo or a short video.
Yeah, and so how will they find that video?
That'll be on their platform, RDA, Rich Dad Advisors.
Okay, so they can go. You can see that on.
I'll
video.
put a link in the description.
Yeah, so just look at that, but it takes a while to get that good, but it's worth it because I talk about it. Kenny's problem right now is finding deals because guys like me have so much money coming in from the last deal you gave us. I have to give it back to Kenny. I said, Kenny, I can't take this money. And his capital raising gets easy because there's so many guys like me, you've made so much money for, I'm trying to give it back to you, right?
Never in my life would I have believed that I would have more money chasing me than deal flow. And in the beginning, I thought I needed money.
You were chasing guys like me before.
Yeah, I was. And that's how you start. And then what happens is as you start to return money, like to you, I just gave you a couple $1 million last week, tax-free, cash out refi. And as you start to do that, and by the way, to hundreds of investors, we're always refinancing projects and returning capital to them because that's why they invest with us or our team or our leadership. And when you start to do that, then the confidence and the trust goes up, as it should. And as you start to perform to the business plan that you told them you were going to do, and so it takes a while. And after 20 years, you have now, a following. And so now we do have more money than we have deals. And so our issue is deal flow. And I'm just somebody that started managing a 60-unit property in college and learned this from zero. So anyone can do this.
Well, it takes a lot of practice here. The point here is this: that's why I love property, but I don't like the management part about it. So that's where Kenny started. And I'll say it again: if you can't manage property, don't go into this business. It's a bear. It is a bear, because that's a business then.
Yeah, it's like anything. You guys go into restaurants, some are managed well, even the same franchise. Some are clean, some are not, some are friendly, some are not. Same thing with property management. Tenants are good, they're not good. The management's good, they're not good. So it's the same.
So one of the things here is what goes from Frank Crary, who was Ken is my teacher. Only lazy people use their own money. And Frank was teaching me how to find gold mines.
Yeah.
So Frank sent me all over the world looking for gold mines of all things, and we love that guy.
Oh, he's the best.
He was the best.
He had such wisdom, and whenever I can get around somebody that's been investing for 50, 60 years, and you should say nothing. You should just talk or listen and ask them questions by talking, and just ask questions and try to get glean as much as you can from them, because that's what I did with Frank.
Frank would come over to our house and we'd sit there and just ask him questions.
Yeah, because he's done it. He's done, oh my gosh, so much.
But my point here is that so finally I put my deal together with Frank. It was a gold mine in China, the biggest gold mine China ever found. I raised $27 million on the Toronto Stock Exchange. We found gold. I was a billionaire for about a year. We had so much gold, and the Chinese government said, "Thank you very much."
Yeah.
They took it from me, and I really understood country risk. But that's how you learn. I go, holy mackerel, not that I hate the Chinese people, but I don't like the Chinese communists. They just took my gold mine. So it looks like we didn't make any money, but the whole story completes last week too. So Kenny calls me up, he says, "I got $2 million. I go, Jesus, what am I going to do with this money? The problem is you got to keep moving that money. And so my friend calls me from Vancouver. He says, guess what? I have a gold mine, and it's in Utah. So Sarah knows, right? I just moved that $2 million right into that gold mine. And then Kenny's part of the deal and all this. It never makes it outside. Please hear me when you see that, from the cash flow going ESB in the eye. The best deals never get outside. Am I correct?
Yeah. In fact, we say the bigger the brochure, the worse the deal. If somebody has to sell you with this big brochure and all this information in there, there's probably some salesmanship in that. And we would do literally over the back of a napkin over a beer or something. Yeah, like here's the high level. Here's what it is. Here's what it'll do. Right?
And the reason we say that is because if you're watching television and all these guys are pumping this stock deal or this mutual fund and all that, run. Because the more promoted it is, it's probably the worst. Would you say that's true?
Yeah, I really would. It's it really is a game of being inside of a bunch of team and an industry and understanding deal flow. Even last week, I was in the middle of nowhere. I was in Pahrump, Nevada, doing some tactical training, and there were real estate guys there. And we were talking about, one guy was doing land leases for billboards, and it's just he's done 16 of them, and they're just ka-ching, 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 and I was like, oh, that's a good idea. And so what happens is you start to ask questions, find out what people are doing, and we don't know everything, and so there's lots and lots and lots of ways to do this, lots of ways to raise capital, lots of ways to do real estate deals with really no management even, and so that's it. And once you're in these circles, then you just get wiser and wiser and wiser.
Yeah, so look at the cash flow quadrant, ESB and I. I stands for insider. You want to get to the inside. And when you get there and people trust you, you have a good reputation, there's no advertising. The best deal just goes. Like I said, Well, it's tonight. Tonight, I'm going to go talk to Mark Telbell. We're going to take a run at this corner. It's a great corner, 32nd and Camelback.
It is a great corner.
And so we don't have the money. We don't know what, but we're going to figure it out. We're going to take a run at it. But that's how it's done. And our friend Sal DeCiccio, when he took my building from 3 stories to 4 stories, what did that do for valuation?
But this happens all the time. You guys need to understand, like if there's a home on a corner and there's a 4-story office building next to it, you can go 4 stories. And once you can add another story, of course, it adds the value to the land, so somebody can build something higher.
Because I was talking to these 2 young women who are now, they think they're Donald Trump or something. They bought themselves a single family. They're starting, they're starting. And I said, you see that building there? That's my building. What do you see? They go, and all around it are all these 3-story buildings. I go, it's a building. I said, this one has 4 stories. What does that mean? They can't see it, but it's sitting right in front of them.
Yep. My friend owned a self-storage on Las Vegas Strip that he owned, and a casino came to him because they could go 40 stories. And so all of a sudden he bought this, self-storage building that was producing whatever, and all of a sudden, because they can go 40 stories, of course that self-storage is gone. It's ripped down, and they go vertical. This happens all over the place.
So when you look at the cash flow quadrant, look at Rich Dad Poor Dad, look at Kenny's 3 books plus this book, you'll start to see things that the average person doesn't see because they're too effing lazy. I mean, I had to look at 100 properties in 1974. It was a lot of time looking at 100 properties. And then all of a sudden I could see stuff.
Yeah, and the other thing is a lot of people don't realize is when you put money in a bank or you give money to a pension or you give money to a financial planner, they now have a problem because they have to invest it somehow. And so that money is your money, and then they need to find people to invest that money. So that's how the world works. They're just middlemen to your money. And so that money makes its way to real estate deals. That money makes its way to businesses. And so why not be on the other end of it? Well, instead of giving somebody the money and then having them look, why don't you figure this out for yourself? And then try to get that money from those same people to do deals. That's how this whole system works.
Right. So once again, this is the 4th book in the series of Kenny's books. ABCs of Real Estate, ABCs of Financing, Advanced Guide to Finance. The 3rd book is Property Management, and the 4th book is the ABCs of Raising Capital. All are essential. If you're lazy, don't start, because it takes a while, right?
It does take a while. It's not something you're going to learn. You're going to make some mistakes, just like we have, and you'll have a lot of wins. And I tell everybody, just focus on hitting singles, because there's way more money than there are deals. And if you can see the deals, you'll get the money. Money
flows in. Money just flows in on you. So once again, if you don't want to do all this work, then follow Dave Ramsey's advice. Live debt-free. Call your house an asset and enjoy life. Hey, Kenny, thanks very much.
Hey, my pleasure. Thanks for having me on.
And thank you all for listening. Sarah, final comments on that.
Thank you so much, Kenny, for your time and coming in.
Because you just bought your first property, right?
Right on.
It's actually 2 cabins on a lake in northern Indiana.
Perfect.
So I'm prepared to make all the mistakes. But it'll be a great adventure. But so far it's been fun and interesting. I am doing all of the maintenance so far myself, the remodel.
Yep, good.
So I'm learning how to install toilets, sinks, how to fix water softeners. I mean,
That's how we all start.
Yeah.
No,
yeah.
It's a good experience too, because when you have a contractor, now you're going to know what to
I can speak the language a little bit.
Yeah, it's
definitely.
very important.
So yeah, it's fun. It's been a fun ride so far.
So congratulations on starting.
Congrats. That's great
That's
news.
the most important thing. Sarah has started.
Way to go.
So thank you all very much. And thank you for listening to the Rich Dad Radio Show.
This podcast is a presentation of Rich Dad Media Network.